as we get ready to trade tomorrow, Tuesday, December 1st, 2020, final month for the quarter, for the year, and also heading into the last couple of weeks before the ES contract expires and rolls over to the March 2021 contract. And I bring that up even though we're mostly talking about and trading the S&P 500 options. We usually see some kind of really big wild swing in the market as we head into that contract expiration for ES. Here's our S&P 500 monthly chart. Here's our close today, a new all-time closing high for the monthly time frame at 36.2163 versus this one from August. We finally took it out. September and October were both failures to take that out, and we could see we had red months where we closed the month below where we opened, and here we are in November with a close well above where we opened with a big green candle and a new all-time closing high. And look at this volatility in 2020 compared to 2019, which was pretty much just a nice easy ride compared to what we got here this year with 1 month left to go. Here is our weekly chart. I wanted to bring this up because on Friday of the week we just traded, on Black Friday, the day after Thanksgiving, we closed at a new weekly all-time closing high and just our current daily all-time closing high. That was 36.38.35. That finally took out the closing high that we had made 2 weeks previous. So we've got an all-time closing high, a weekly all-time closing high, and a monthly all-time closing high, all as fuel underneath us to help us get up there and resolve this ES disparity, where ES has this high that was printed this day here. On ES, their all-time high was printed in the pre-market, but by the time the S&P opened that morning, we couldn't get any higher than 36.45.99, and we rolled over from there, and we have yet to ever go back and resolve that level. And I highly doubt they're going to let this ES contract for December expire without resolving that level. And that will take us to about 36.70 to 71 on the S&P. I have a source that trades ES that has a balance target of 36.84 or 86, something like that, up there in the 36.80s. It's kind of like the double up, double down thing that I do, only he uses it with a volume profile. So if we take his balance target, maybe we're even going to overshoot that 36.70 and go all the way to the high 36.80s, and that would make a lot of sense in putting a nice clean 100 points on this 35.88 that we set back in September at that all-time high and then we rolled over from there. My grandfather clock is going off in the background. I apologize, but I'm not going to re-record this video again. So I want to also point out that in September, when we traded up to this high, we were going into the first month, the first days of that final month for the ES contract. This was the September ES contract, and we swung up to this high and then rolled over and kind of sold off from there. And here we are starting tomorrow, trading the final month for the December expiration contract. And so this really fits the time pattern and everything that we've seen in the past as we head into expiration for that contract. So timing-wise, that makes a lot of sense. Finally, let's take a look at the roadmap so we can really sort of whittle down what the levels are that we should be looking for. I think we should come in tomorrow if we want to really be bullish and really put some confirmation on this. We want to come in tomorrow above 36.38.35, where we closed last week on Friday. Here was Friday's candle. Here's today. I think if we gap up open and hold this as our low, above this as our low of the day, it's a pre-gone conclusion that, or foregone, whatever the phrase is. It's a conclusion that we can make that we are going to make, resolve that level of 36.70 to 71, if not overshoot it, and go on to the high 36.80s with that balance target for ES. And that would take those 36.50 calls that we got into today in the $11 window. Those would take those for at minimum a triple, maybe even a quadruple if we go all the way to those 36.80s. So we want to come in strong tomorrow and at minimum maybe hold above today's high, but better still, open above and hold above this 36.38 level and not look back and just go. If we come in flat to lower or sort of like inside the range that we traded today, then we might be in store for another pullback that takes us down to test the 10-day simple moving average once again. It's going to be rising. It's probably going to be like maybe about here, maybe about 36.10, 36.12, something like that. So maybe we got to come in and test the halfway back point of range we just traded on Monday, test that, and if that holds, then we carry on. But if that breaks, we could get into some trouble. We could get into a situation where we've got to back test this low again, and if that doesn't hold, fill this gap and maybe go on to test the 20-day simple moving average, which ought to be rising up to, maybe right out of this blue band here, right up to about 35.57 to 58 by tomorrow. So that would be the bearish case scenario. So let's really focus on where we closed today and where we closed on Friday as good levels to let us know, where our line in the sand is for tomorrow. Okay, I hope you had a good day trading today. Hope you got those short put spreads and made that $350 credit per $350 credit per contract. And I hope you got into those 36.50 calls, or if you took the Wednesday ones, maybe this move is going to happen fast and we'll get it done by Wednesday and you will score as well on those. Have a great rest of your night. If you have any questions, shoot me a direct message on the private Twitter account. As always, good luck and good trading.